On the last week, gold traded as low as 1659 and as high as 1738. Numbers are rounded and the market is closed. And on the last trading session of Friday, we have had the gold spot closing about 1727, and the numbers rounded and the market is closed. Gold is trading in a very clear uptrend and it's above its all daily symbol moving averages. We are a little bit stretched from the 20 days daily symbol moving average. Look for it as a good chance to buy the dip, and the momentum is quite strong for the RSI readings. It's moderate in all the charts. Actually, on the monthly charts, it indicates higher demand, which is a good sign. And for the supports are seen about 1710. If broken, then 1689. And if this support is broken, we will go look to 1670, which is the 20 days daily symbol moving average, and the resistance 1747, and followed by 1796, and then 1825. That's all. We'll move on now to the economic calendar. On the economic calendar for the coming week, and from the United States, we are waiting for the following economic headers to be released: the CB consumer confidence on Monday, and then the GDP quarter to quarter for the first quarter for the United States, and the FOMC interest rate decision and statement on Wednesday, and on Friday we're waiting for the ISM manufacturing PMI. That's all. We'll move on now to the trading strategy. Hi again. In our last video, we have been interested into short setups in the gold market, and we have been talking about this particular signal that is under one condition: that if gold futures weakened and closed below 1680, then we may look for a short position with an initial target of 1600 to 1610. That signal unfortunately did not take place because we have seen last week that gold futures weakened, and they pierced through 1680 major support line on the daily time frame, but they did not close below. The market was bought back, and as we have seen, the gold market have held quite strongly on the last week. Thus, we are going to look for a bullish setup this week into the gold market. Going forward for this week. The point is that we don't want to miss a breakout that could be massive, and also we don't want to be stuck. This is really a very dangerous cross point in gold. The gold is not the first time that reaches this levels and give the indication that it wants to break up, to break out to higher levels. Then it collapses suddenly without specifying reasons. However, also keep in your mind that rotation power of gold is like $100 to $150 to any side, upside or downside, and this can be considered normal. It's about like 6% of the price. However, the major support for gold, I'm talking spot here, is 1660.20. If it broken, a bloodbath will take place in this market, and gold could sell off immediately to 1400. And a continuous move above the major resistance line, which is located about 1778 spot rate, will send gold quickly in a few days to above 1911, the all-time highs, maybe to 2000 or 2100, which is, as I said, the 100% Fibonacci. Bottom line, we are, as I said at the beginning, we are going to look for a bullish setup in gold market. We will be trying to buy ahead of 1710. We will use 1710 as our stop loss. This is the first setup. Then if gold declines below 1710, we will buy with a stop loss at 1559. Our targets will be 1796, 1825, 1911, 2000. This is the bullish scenario, but if there was a weakness in the gold market and gold struggles to stay above 1703 spot, also if the GDX, the stock, broke below 1331.5, at that point sell gold, okay, with a stop loss at 1748 and with a target of 1450. That's all. Thank you guys for watching this video. Hopefully you make money. Next week we'll meet you in another video.